Today, August 29, we detected unusual options activity on American Airlines, AAL. 15,000 unusual options. What could this mean for the stock? As you can see from the charts, it looks like American Airlines could be coming back up. So in this video, we will analyze to try to understand what the large wealthy investors are doing with AAL. Are they betting that the stock will go up or down? So let's take a look at the closer analysis of the data. October 20s, 13 strike puts, 15 strike puts. As you can see, October 20, 52 days away. 15 strike puts, the 15,000 volume here, and the 13 strike puts, the 15,000 volume over here. Both of these strikes, open interest, much less than 15,000, only in the hundreds. So we know these are opening trades, and we believe they are buying the 15 strike puts and selling the 13 strike puts. And when you analyze the trade, you can see that this is a vertical put spread that is bearish, a short position with a negative delta, negative 33. Anything that is a negative is a short position that is bearish. You can see here, currently AAL is trading at $14.88 for the stock. As the price goes down on the x-axis, this trade becomes more profitable, right? That's the number that's changing as we go lower on the price on the x-axis. The y-axis here is the profit loss. Anything above is profit, anything below is a loss. Because this is a profit is capped here, there is a belief by this investor that $13 could be a strong support, and that's why they sold the 13 strike put. Okay, and if we take a look at the charts, does that confirm that, right? Can we see a strong support at $13? Right here, $13 is over here, and we can see here $13 has been strong support. You can see that this was the level right when the previous earnings back in April, when it started to go back up, right? So this $13 level is strong support here, and that's possibly why they sold the 13 strike puts, to reduce their cost basis. Because the cost of this trade, if we take a look at the unusual options, they paid 78 and sold to collect 18 back. So the difference between the 78 subtracted by the 18 that they collected to sell that put option at the 13 strike means they paid a net debit of $60 per trade. And since they did 15,000 of them, that's a total trade value of $900,000. So this trader definitely thinks American Airlines will continue to go down, and betting $900,000 that it will. Okay, they could be a hedge, they could have stocks, but the fact that they are hedging at this time tells us that there is some nervousness and some uncertainty with the stock, that this trader wanted to put $900,000 to protect their potential loss on their stocks. Okay, so if you found this helpful, if you learned something, please smash that like button. And if you're interested in stocks that are valued greater than $1 million, this did not quite make it to $1 million. then join our membership where we share unusual options activity on other stocks that have greater value, because these investors have a lot more capital, a lot more information, and have done a lot more research to bet more than $1 million. And those stock price predictions, either up or down, are more accurate based on the data. Okay, so we share that with our members, so our members can either go long or short on stocks. And we also share our trade strategies as well. If you're interested in that, make sure to click the join button on our channel homepage to learn how you can join our membership to start maximizing your profits, reducing risk. If you haven't been profitable during this market, while the market is strong, it does not mean that your strategies are not the best. It just means that you are missing these unusual options analyses, the data to strengthen whatever strategy you're using. However you decide your stock picks, you always want to check the data on unusual options activity. And you can do that by subscribing and hitting the bell icon to get notified whenever we detect unusual options activity. Thank you, and take care, everybody.